Hi folks, this is Sean Hyman, and today I wanted to revisit something that I had talked about in a previous video. I wanted to talk about how oil influences the Canadian dollar and influences dollar CAD and CAD yen, and so I want to focus in on CAD yen today. And I want to show you that this is not just a big picture move that you have to watch, but even in short term to medium term trading, you can use these things. This is oil on a 4-hour, 40-day chart. And I've got CAD yen on its 4-hour, 40-day chart. Let me kind of bring this down a bit, and you can see what has happened here. Oil had been in a downtrend, had bottomed right here, while also getting some RSI divergence, which was the first clue that this right leg of the double bottom could be an actual real bottom here. The confirmation of that being the case was when it uh, broke out here and closed a candle above here. And let me see if I can get that level. That was on 6/29 of 2012. And so it breaks out here, retests, and then heads higher. So there's the oil breakout. Okay, now let's look at CAD yen. Okay, CAD yen was right here when oil broke out. So the heads up came first from oil, that oil was heading higher. That was going to be bullish for CAD yen. CAD yen hit the top of its resistance channel, this where this black line is and this black line is. Here was the top, which you can see resistance here. You can see resistance twice here, and then resistance here. So it comes up, hits resistance, pulls back, and then breaks above its channel. So now CAD yen is breaking out and will head much higher, which was first tipped off by oil. And so, if you can watch oil's chart intraday, even in other words, a lot of people think you have to look at oil and on its daily chart only. And believe me, I watch oil's daily chart. But even near-term trend reversals and breakouts in oil that happen on medium-term time frames, like the 4-hour chart, you can play trades in the forex market on CAD yen, and you can be buying CAD yen as even ahead of the breakout as oil begins to break out. And so, by using oil as your trade buy signal, you would get in CAD yen back here and already be profitable by the time it gets to the top of the range, and wildly profitable as this breaks out and heads up here well outside of the range. Remember also on these rectangle patterns, you can take the width of the pattern and measure that in the number of pips and project that from the point at which there's a breakout, and that is a minimum price target. Minimum price target. So there's roughly there's close to 200 pips here of range. And we know that because 76.68 is the bottom of the range, 78.56 is the top of the range. So just shy of 200 pips there. So if the top of the range, let's just say, is roughly 78.50, then that would just put you just shy of 80.50, just shy of 200 pips higher out of that for the price target. So again, you've got an oil breakout, which tipped you off early in the trade, and then you've got a rectangle pattern breakout that gives you a price target, eventual price target on CAD yen. So this is not to be a real-time trade example of something I'm telling you to go into now or anything like that. I give all my direct trading recommendations in my trading service, Currency Cross Trader, but I just want to it to serve as a basically a real-time example of what can happen for you when you look to the oil chart and when you also look to chart patterns, in being able to gauge when to buy and how long to stay in a trade. So the oil gave you the trade of when to buy, and the rectangle pattern gives you a minimum price target of how long to stay in the trade. So as this pair works its way up, you just move your stop up, possibly take part of your lots off the table, and keep moving your stop until eventually stopped out. Hey, thanks so much for watching. Bye bye.